Hello, my name is Demetris Theophanides, and I am the Director of XSpot Partners and Tied Agent of XSpot Wealth. Today, we will analyze the performance of our portfolios for the first quarter of 2024. With the completion of the first quarter of 2024, we are happy to observe that all XSpot Wealth portfolios are positive. From our most conservative portfolios to the most aggressive portfolios, the returns are consistent with the performance of the markets. Despite lower expectations for rate cuts during the first half of the year, the global markets are recording all-time highs. In line with the general positive investment sentiment, our aggressive portfolios are recording impressive gains for the first quarter of 2024. Our global growth plan, with 100% exposure to global equity indices, achieved a return of 10.27%. The growth ESG plan achieved a return of 10.37%, while the growth plan with 80% equity indices exposure recorded gains of 8.75%. Our balanced portfolio achieved a remarkable performance of 5.99% with equal exposure to equity and bond indices. Our conservative portfolio and our new fixed income portfolio with 100% exposure to major global bond indices achieved returns of 1.86% and 0.25% respectively. The returns of our conservative portfolios reflect the shift in investors' expectations related to the anticipated rate cuts, which have been pushed out to the second half of the year. Once the interest rates eventually fall, we will see long-term bond prices to rise, which will have a positive impact on the performance of the conservative portfolios. During the first quarter of the year, we did not make any changes in our aggressive portfolios, since we have already increased our exposure to the technology sector in 2023, and we also gradually increased our percentage of the total equity exposure. In the conservative and balanced portfolios, we slightly increased the average duration of bond products as we anticipate that after the end of the second quarter, the major central banks are likely to proceed with the first rate cut. Despite concerns such as geopolitical tensions and high interest rates, the markets were remarkably resilient for the first quarter of 2024. The major US indices are recording gains of around 10%, while some European indices are recording gains of over 10%. Corporate profitability overall exceeded analyst expectations, while the USA economy remains strong, surprising investors and analysts. As we enter the second quarter of 2024, the big question of investors is when the first rate cut by the major central banks will occur. Switzerland is the first advanced economy to unexpectedly cut interest rates, following a prolonged period of high inflationary pressures. In the United States, inflation has stabilized at 3.2% in recent months, and the Federal Reserve, based on recent statements, is likely to proceed with the first interest rate cut in the third quarter of 2024. Other central banks are likely to follow. The anticipation that the Fed will lower rates had a positive effect on stock prices, since company earnings and profits rise when borrowing costs decline. And this also helps to accelerate economic growth. For the first quarter of 2024, the technology sector was once again the best performing sector. But we also had very good returns for the industrial sector and the energy sector. There are indications that the rise of the markets is not based only on the 7 big stocks that kept indices at higher levels, since a lot more stocks are participating in the upward market trend, recording new all-time highs. As we look ahead to the second quarter, We believe that the global economic growth will remain positive, and central banks in the USA and Europe are likely to shift toward cutting rates in the third quarter of 2024. The current economic environment is favorable for equities, but at the same time, the anticipation for lower interest rates will positively affect bond prices as well. Let's not forget that the American presidential elections are approaching, and historically, the election year begins and ends on a positive note. While a near-term market pullback and volatility will not surprise us, we believe that the best course of action to achieve your financial goals is to stay invested with a well-diversified portfolio based on your time frame, individual circumstances, and risk tolerance. We're here to help. Please do not hesitate to request a free consultation. Thank you for watching this video. Please stay tuned for more videos to follow.